What the hell is happening with the market right on this last month?
Yeah, I mean, it took me by surprise. It's scary because you don't feel in control. I think we're probably, because of the new entrants into the market, the downside will be less big in the major cryptos. It'll still be huge in the more risky stuff. This being a $250 trillion asset class, which is 100x from here, which would be the largest growth of any asset class in all history in a short period of time.
So what the hell is happening with the market right on this last month?
Yeah, I mean, it took me by surprise. My base case was that we were going to see the typical year-end rally. Obviously, most of us had the same idea. Usually when most of us have the same idea, it doesn't work. But the other thing I did know is, having come from that finance background, knowing how hedge funds and institutions work, I also knew that if you're a hedge fund and you've got crypto in your portfolio, you've probably had a good year. So to get paid, you tend to close out your portfolio. You know what you're going to get paid at the end of the year. They are incentivized to sell their positions, to go away for Christmas, have a break, that kind of stuff. The institutions like pension funds and others, they tend to rebalance their portfolio. So like Ethereum's up 500% this year. So if they started with a 1% weighting, they're now at a 5% weighting. So they'll probably bring it back down to, let's say, a 2% weighting in line with their allocation. So you've got institutional sellers that never really were in the market before. And they're not expressing, I don't think, a negative view of the market. What they're just doing is rebalancing for year end. And so my general view is that most of that selling is now done. And so the next thing they all come into January with is a new P&L. That's right. And there's nothing wrong with somebody focusing their attention on one particular area of this new revolution, blockchain revolution, digital assets. But it doesn't have to be at detriment of everything else. That's crazy. It's not a zero-sum game. If we don't create sound money first, it's all lost. Okay, that's his opinion, and good for it, Jack. Go for it. Get people around you, build stuff, do stuff. But don't take away from other people doing other things in the digital asset space, because there are other people who are focused on specific things in DeFi or stablecoin, interoperability, and they're all equally applicable. Let everybody focus on their bit. That's how distributed networks work. If we all focus on our bit, we've got a massive network of experts all focused on building out component parts of all of this. Because everybody fears change, right? That's just a human thing. And the rate of change here is extremely fast. All of these things is people fearing change. Jack Dorsey's like, well, I don't want this Web3 thing. I just want Bitcoin. And, the Ethereum guys are like, we don't want Solana and Terra and Avalanche. Everybody fears change. Traditional media fears change. The banking industry fears change. When change is happening so fast and it's not being driven by one entity, it's this broadly spread phenomena, it's scary because you don't feel in control. The idea is, without going into the 2 hours of history and everything within this, monetary system and system of value is broken. The ownership and the monopolies that control a lot of this are something that most people have become uncomfortable with. And here we have a new world, this digital world that is distributed, that has less intermediary. And it's a world where we can create endless GDP because you're not constrained by natural resources. In Brazil, what is the largest driver of natural resources? Agriculture and energy. That is a constraint on the GDP of the country. So the amount of money sloshing around, the amount of opportunity as you guys as entrepreneurs is actually a direct correlation to how fast GDP can grow. And you've got other monetary issues. Brazil has always had a relative level of instability with its currency and other issues. So here we go in a new digital world where you can create digital sovereign states of which you can operate in as a Brazilian that has nothing to do with the Brazilian economy. And it's limitless. There's no boundary. That's why it becomes the new universe. Here we are walking away from an old broken system, which is Brazil 1.0. And here you are walking into world 2.0. You're not constrained as a Brazilian. I'm not constrained because I'm in the Cayman Islands. So we can build businesses like you guys are, which exist everywhere. And again, we're showing that here today. Well, I'm in the Cayman Islands, you're in Brazil. We're doing this in English. It'll be translated in Portuguese. And what we're doing is creating a globalized piece of content. I mean, it's really interesting. Those things were not easy to do before. Now it's almost frictionless. The fact that we're in different countries is frictionless. We have no issues whatsoever. What we'll find is that over time, volatility falls as more people are in the network because you don't have discrepancies between buyers and sellers that create illiquidity because there's more people in the network. So you'll tend to find, Amazon now is trading off call it a 30% volatility. So it's half half that of Bitcoin. So I think, as Bitcoin or cryptocurrencies get to 1 billion users plus, what we'll find is that the volatility will fall, the prices become less exponential in nature, both to the upside and the downside. Well, 1 billion people, bizarrely, because of the compounding numbers, if it's growing 113% a year, you get there by 2024. Just use the adoption curve, assume it slows a bit, because adoption always slows because the rate of change goes down when more people are in it, right? So it's easier to go from 1 person to 2 people, that's 100% growth, than from 2 to 4. Just extrapolating the numbers, you get to 1 billion people by 2024. And that's by slowing the rate of growth down to 80%. And so you're at 3 billion, 3.5 billion by 2030. Well, and also look at the holders of crypto. They're not the traditional holders of equities. Here's a bunch of old people wagging their fingers saying, well, it's much more volatile. The younger people who own crypto like the volatility because the volatility gives return, risk reward. Well, the equity market gives less of that. So it's a whole change in risk appetite for the population. So it's currently about 2.5 trillion. If I look at all the other asset classes around the world, if I look at the total derivative market, it's 1 quadrillion. I think there's a reasonable chance of this being a $250 trillion asset class, which is 100x from here, which would be the largest growth of any asset class in all history in the shortest period of time. That will pretty much dovetail in with the idea that 3.5 billion people are using it. That's just extrapolating the growth numbers of the network. So if 3.5 billion users in 2030, well, the market cap's going to be something like 250 trillion. Yeah, it all kind of backs out pretty straightforward just using the network adoption model.
When regulations come, do you believe the market will crash? And if yes, do you think there will be a fast recovery or will be a slow recovery?
I think we probably, because of the new entrants into the market, the downside will be less big in the major cryptos. It'll still be huge in the more risky stuff. And I don't know the format of where we go, whether we keep going that log trend and we keep hitting the bottom of it in a sharp sell-off like we did this year, down 50%, then back up again, or whether we do a down 50, down 40 and trend sideways for a year. I think we'll see both of those types of price actions, but I don't think we get the down 80, 90. I don't think that's applicable in the market as deep as this now. It's ridiculous. So they're two different things. I think the application growth of the network of Ethereum currently miles larger than Bitcoin, and therefore ETH is still undervalued versus Bitcoin. But ETH will lose market share to others, and it's the whole space will go up 100x, and nobody should care what's the largest thing here. It's the whole space we're interested in. Ethereum is a richer, deeper environment with more participants in the network. Mm-hmm. So it's going to be slightly more resilient at this point, and that's okay. And again, people take this flippening as like, oh, well, Ethereum's now a better cryptocurrency than Bitcoin. None of us think in those terms. It's like comparing Apple and Amazon. They're just different businesses. It's ridiculous to need the level of decentralization that Bitcoin has for certain things. We've seen this, once the further you move away from decentralization, the faster and cheaper it is. It's a trade-off. Everything in life is a trade-off. Now, some people, it matters more than anything about their Bitcoin decentralized. Great, go for it. That's not the real thing. Is the distributed nature of the participants, the ownership, the co-ownership of the network, however broad that is better than not at all. And yes, Bitcoin is the largest in that way. I just don't think it's everything here. People are getting confused looking at all of these other tokens, protocols, and trying to compare them to Bitcoin. How decentralized is it? Well, we're not talking about creating a base layer of money here.